guys, welcome back. So let's hope that we can finish this lesson in the next hour. So let's get started. Again. Alright. We are now on the 31st, so we are at the end of the month. And it says you paid the business rent via debit order for the first month of trading to the rental experts, 5,000 Rand including VAT. Right, so let's do our T accounts. Well, let's go back to your T accounts. Okay, so we paid via debit order, so bank. It's an asset plus minus. What did we buy? Paid rent. So that'll be your rent expense or rent. It's an expense, so minus plus. Remember, your expenses are always debits and your income will always be credits. And then we've got your VAT again. Money left the bank, money went out, so that'll be VAT input. Okay, and that's an asset plus minus. Okay, so let's have a look. The bank decreased with 5,000, if I'm not mistaken. No, 5,000. Your rent, which is a debit, is 5,000 divided by 1.14 to get to the VAT exclusive amount, 4385.96. And then your VAT input, which will always be debit. Remember, VAT input is always a debit, VAT output always a credit. Will be 614.04. 614.04. Alright, and now to transfer that into the journals, we see again your bank gets credited. When it goes credited, you go to your cash book payments. So let's quickly complete that in your cash book payments. So the document number will be document 08. The date is the 31st. Who did we pay? We paid the rental experts. Then your bank is 5,000. Your VAT input 614.04. And then since there are no accounts there for rental, that'll go into your sundries account, and that is 4385.96. Your folio, your number is a nominal number because it's an expense account, and your details is rent. Alright, so that one's been done. Okay. Next one. Drew a cash check from petty cash. Sorry, it's first wipe here. Excuse me. Okay, drew a cash check to restore the petty cash impressed amount. Alright, now what that basically means is bank, you drew a check, assets plus minus, and petty cash, asset plus minus. Okay, now what that means when it says you drew a cash check to restore the petty cash, because you've used up quite a bit of petty cash. If you look here at your petty cash journal, so what they're saying is that amount that you've used up is you obviously have to replenish it. You have to pay that back because you need a float in your petty cash of about 2,000 Rand. So now you have to go and add up all the petty, basically add up how much of the petty cash you used. Now I'm going to do that with a calculator. So the total is 1618.62. So that is the amount that we've used up. So now we have to add that back into petty cash. So in other words, your bank will then be credited with 1618.62, but your petty cash will now increase with that amount because you're basically just paying that amount back into your petty cash 0.62. Back in, okay. So now we just have to do this transfer, or the transfer in your journals. Your bank gets credited, so you do that in your cash book payments. So let's quickly do that. The document number is 09, date 31, it's a cash check. The amount is 1618.62. Okay, and then in your sundry accounts, that'll be 1618.62. B8 is your petty cash, and the details is petty cash. Okay, so now we've done that one. Okay, cash sale according to cash register roll. Now we're going through all that other rigmarole again. But this is all practice, like I said before. You just have to practice it, that it becomes like a first or second nature to you. So let's quickly do that one. Now what I do while I do these exercises, I think I told you this before, but I have a template here. Hope you can see it, and there I've just drew three T accounts type things. So I just fill it in, one account, second account, and the last column will be my VAT account. It just makes very much easier that you don't have to keep drawing these little T accounts. So if you have a template of it, it just makes life a lot easier. Okay, so first of all, let's go to bank, asset plus minus. Then this was sales because it's a cash register roll. That's a equity minus plus, it's an income. And then VAT output because money came in. VAT output liability minus plus. And then with that, you have your trading inventory, it's an asset. And then your cost of sales, which is an equity minus plus. Remember, those two go together and those three go together. So let's see what have we got here. Cash sales according to cash register roll. So our bank increased with, okay, I'm just going to write it down from here, with 30472.2. Then your sales income, now remember that will be the VAT exclusive amount, is 30472.2 divided by 1.14, which gives you 26730. And then your VAT output, which is always a credit, is your bank amount minus your sales amount, and that gives you 3742.2. Alright, great stuff. So let's put that in the journals quickly. So that'll be cash book receipts. So that's your CRR 31. Details is your cash sales. In your analysis of receipts, you've got 30472.2. Your VAT output amount is 374,220, and this was sales, so it's 2673000. But now we need to remember, we need to take the stock of the system as well, and then get the cost, deduct the cost so that you get to your profit. So let's quickly do the magic block. Cost price, profit, selling price. It's markup percentage. The cost price 100, profit 50, selling price 150. We've already got it, remember, magic block, VAT exclusive, we've already got the VAT exclusive amount there. So that's 26730. So that'll be 26730 divided by 150, multiplied by 100, and that will give you, and where are my notes, 26730, 17820. So that'll be 17820. Okay. So let's put that in the journals. That your cost of sales trading inventory will be 17820. 17820. Okay, so now we've done that. Cash sales is done. That one's done. That one is done. And then that one is done. Alright. Oh, I didn't fill it in here, so just to give you, remember your trading inventory left the business, 17820, and your cost of sales is the expense that you deduct to arrive at your profit, 17820. Okay. Yeah, I know this is a very long lesson, but it's good to practice, allows you to learn quicker and understand stuff a bit better. Now, next one. Paid rates and taxes as received from Ekurhuleni by check. The following cost components were shown on the bill. Alright. So, okay. Let's just do this. Rates and taxes and VAT. So it's bank, which is your asset plus minus. We are paying rates and taxes. Rates and taxes, which is an expense, so it's a debit. And then VAT, because money left, so money went out, so it's VAT input. Asset plus minus. Okay, so let's first see. So they give us the assessment rates of 277.95. They give you electricity 345.45. They give you refuse removal of 50.52. They give you water service of 482.63. Okay, now that's it. So assessment rates. So your assessment rates are 277.95. Electricity, I'm not going to write it all down, it's 345.45. 345.45. Your refuse is 50.52. And 482.63. So if you add that all up, the total will be 1156.55. So your bank decreased with 1156.55. But now we need to remember something here. Your assessment rates is already a tax. So when you calculate your VAT amount, that specific amount must not be included in the calculation. Because assessment rate is a tax, so you cannot pay a double tax on that. So the assessment rates need to be excluded from that amount if you want to, or when you have to calculate the VAT amount. So now to do that, we're going to deduct the 277.795. Sorry, I wrote very ugly here. 0.95. So now that total is, okay, so it's 878.60. Alright, so when you remove the assessment rates, your total is 878.60. So now that amount, we divide by 1.14. And then we get to the VAT exclusive amount of 770.70. Okay, so we've got the VAT inclusive amount and the VAT exclusive amount. So now you take the VAT inclusive amount, which is 878.6. You deduct the VAT exclusive amount, and then that gives you 107.90. So the VAT that you paid on that transaction is only 107.90. So your rates and taxes will be 1156.55 minus 107.90, and then that will give you, let me just get my notes again. Yeah, and then that will give you 1048.65. Okay, so just to explain this one again, you add up all those items, the assessment rates, electricity, to arrive at your total. But to arrive at your VAT amount, you need to deduct the assessment rates, which is already a tax. So there we deduct it, you get that total. Then you get divided by 1.14 to get to the VAT exclusive amount. You take your VAT inclusive amount, deduct your VAT exclusive amount, and then that will be your VAT amount. Then to arrive at the rates and taxes you're actually paying will be your total, your bank, minus your VAT input, and that will give you your rates and taxes. Okay, so let's just transfer this quickly to our journal. So the bank gets credited, that's cash for payment, obviously because we paid money to pay it. So let's quickly fill this one in. Cash for payments, document number 10, the date 31. Who did we pay? We paid Carlo Leone. Then the total is 1156, that'll be bang, 0.55. The VAT amount, as we calculated it, it's 10790. And then in the sundry account, we paid the 1048.65. The folio will be N8. And then the details are rates and taxes. Okay. So let's mark that one. Rates and taxes done. And we are actually almost done with the exercise. Can't believe it. Alright. Then we've got the bank statement. Wait, let me first wipe here. Okay. Now it says the bank statement shows the following credits. Alright. So first of all, okay, I'm just drawing 3 here. Okay, it says the bank statement from the bank. Now, okay, I'm just going to draw another account here. So now I'm drawing 2 bank accounts here. First of all, I'm drawing the bank account for the business, and then I'm drawing a bank account, well, a bank account for the bank itself. Now, one thing we need to realize, bank for us as a business is an asset. Am I right? That's what we've been learning all along. But the bank account, the bank sees you as a liability. So when you get your bank statement, it will be a reversal of your bank statement, if I can put it that way. Because remember, they owe you that money. So the bank sees you as a liability. So in other words, from the bank statement side, you are a liability, and that's minus plus. But your bank statement is an asset, which is then plus minus. Because remember, your money is in the bank, they owe you that money, it's not their money, they owe you the money, and therefore you are a liability. Basically, they see you as a liability. So when they say here, the bank statement shows the following credits. So 94.17 interest. Remember, that's for interest. So if the bank statement sees you as a credit, that would be a debit to you, to the company. So, yeah, so because it's in reverse. They see you as a credit, it's your debit. If it's the bank's debit, it's your credit. So what can we see there? The bank increased with 94.17, and it's for interest, so that means we didn't pay that interest, we received received the interest. So the company's bank increased with 94.17. So that's awesome news for us. And as we learned, interest income, you can't claim VAT on that. So now in your books, you've got bank, which is an asset plus minus. And since we received that interest, it will be interest income, which is the income obviously, so it's an equity account, minus plus. Okay, so our bank increased with 94.17, and then we had an income of 94.17, which is now your interest income. So now let's take that. So it's cash book receipts. Where's my other pen? Let's go to our cash book receipts quickly. Now this will also appear on your bank statement. So it's bank statement 31st. It's from A bank. That's the details. Then remember, your interest gets paid directly into your bank account. So it's 94.17 in your bank column, not the analysis of receipts. Analysis of receipts are only when you receive the money physically at your business, but if it's paid directly into the bank account, it goes directly into your bank account. And then under sundry accounts, we've got 94.17, folio in 4, and then it's interest income or interest on current account or whatever you want to call it. So that will be that one over there. Okay, so we've done that one now. Let's do the next one quickly. So I hope everybody is clear with this. But just remember that story about the bank. The bank sees you as a liability, so therefore a credit will be a debit for you, and then vice versa. Alright, so let's see the bank statement. Okay, now here we go again. Let's just first draw our bank account. Okay, so first of all, let's quickly have a look. Now, okay, the bank statement shows the following debits. So now we go the bank statement again. It's bank. Remember, they see you as a liability. Assets and liability minus plus. So it says the debit was for insurance of 625. Now once again, so now it's a debit, so 625. So for you, that's the bank, you show the debit, so it's a credit for you, so that'll be 625. So you see money left the business, so this will go, so this is obviously we paid for the short-term insurance on the vehicle. It's a debit for the bank, so that will be a credit for you. So that will go into your cash book payments. So let's quickly fold that into the cash book payments. Okay, let's just first do this. So it's bank, asset plus minus. It's insurance. Equity minus plus, and then obviously we can claim that. So money left the bank, so it's money went out, so it's bank input, which is an asset plus minus. So let's quickly complete it. So the bank decreased, credited 625. Insurance paid was 548.25. And then the VAT amount is 76.75. So let's quickly fill that in here. So this will be on your bank statement. It's a 31st. Who did we pay? SA Insurance. So bank 625. VAT input 76.75. And then under sundry accounts 548.25, that's in 9, and that will be insurance. Okay, so we've got that one now, and we are actually almost done. And then bank charges, 242.6, including VAT and the government levy. Alright, so let's quickly do this one. Okay, so first of all, let's just do that. So bank, again, from the bank side is a liability. Then your bank is an asset plus minus. So it says that, okay, it's a debit, so it's 242.6. 242.60. 242.60 is a credit for you. Great stuff. Alright, so let's get this going. Okay, so bank is an asset plus minus. What did we pay? What was that? It's bank charges. Bank charges, it's an expense. And then VAT, money went out, so it's VAT input, asset plus minus. Okay, so first of all, our bank decreased with 242.6. But now they say there was a government levy again of R2.50. So now we take, it's the same story as what we did previously with the assessment rates or the rates and taxes. So it's I'm just going to save time, 242.6. Then you minus the R2.50. Then that'll give you 240.10. And once again, now you divide it by 1.14 to arrive at the VAT exclusive amount of 210.61, and now you take the VAT inclusive amount of 240.10 minus 210.61, and that'll give you a tax amount of 29.49. Okay, so let's just transfer this in quickly here. So we've got a VAT amount, a VAT input of 29.49. So our bank charges then will be 242.6 minus 29.49, and that gives you, let me just go check, 213.11. Okay, so let's transfer that back into our journals now. Our bank gets credited, so cash book payments. Let's quickly complete that there. And this will be on your bank statement. 31, date, name of payee is AAA Bank. 2426 in your bank, your VAT amount 29.49. And then bank charges under sundry 21311. That's in 10. And that'll be your bank charges. Okay. Good. Okay, so that one's done. That one's done. And that's done. And we are almost through the entire exercise. Okay. So for what I'm going to do next, I just quickly need to move this paper up to the center. It'll just be a bit easier. Okay, so give me 1 second there. Oh, and there I tore my paper. That's okay. Okay, sorry about that. Now the next part of this exercise, I'm going to need this and this. Okay. It says duplicates of bank deposit slips. Now remember when we spoke of the cash book receipts, you receive money in your business, but when you do your transaction, if a transaction is not paid directly to your bank account, you first put it in the analysis of receipts, and only when you bank it does it go into your bank account. So now first of all, let's go have a look. Duplicates of bank deposit slips. On the 1st of March, you deposited 100,000 Rand. So now first of all, now you just draw a line under, because it says on the 1st, 100,000 was deposited, and as you can see, it corresponds with your analysis of receipts. So that will be 100,000 Rand. Okay. Then they say on the 5th of March, let's go to the 5th, just draw a line under there. They say that 56872 was deposited. So now you add up those two items that's in your analysis of receipts, which will be 11400 plus 45472 equals 56872. It corresponds with your cash deposit slip. This is also where you can check if you've done it correctly. 56872. So then that 56872 goes into your bank. Then they say on the 17th of March, 26220 was deposited. Sorry, where did they say? 17th. So let's go down to the 17th of March. So let's add up those three quickly. That'll be 7695 plus 12825 plus 5700. That gives you 26220. It corresponds with the amount of money we deposited. So that amount goes into your bank. 26220. And then lastly, on the 31st, that last amount was banked. And that is basically everything. So when you're done with this, now you have to go and you need to draw your accounts, your lines, because you are basically done with the month. And then you need to add up everything. And believe me, try not to make a finger type mistake on your calculator. I know if you're under pressure when you're in an exam, it can sometimes happen. So I'm obviously not going to do that now to save time. So I'm just going to put in all the totals here. When you add up the analysis of receipts, you don't add up when you do the cash book receipts, you don't have to add up the analysis of receipts. You only start from bank. So it's 363658. 363658.37. Your VAT output amount is 13946.48. Services rendered 15000. Your sales is 84617.72, and your sundry accounts 25009 25,094.17. Just want to confirm if I got that one right. 25,094.17. That is correct. And then your cost of sales and trading inventory, that'll be 56411.81. 56411.81. Okay, so let's quickly add up the cash book payments. That'll be 193,665.48. 23133. VAT input is 23120.43. Trading inventory 80247.90. Sundry amount account is 90297. And let's do the petty cash quickly. We've already added up the petty cash when we paid back money. So postage 171.14. Staff refreshments 185.84. VAT input 117.44, and then the sundry account is 1144.20. Okay, so now we've added that. Now, just want to look at my time. Still good. Okay, but now from here it doesn't stop, because now from here you need to transfer that to the general ledger. But now you need to figure out which side of the general ledger does each account have to go. So now once again you go back to your T accounts. Alright, let's go back. Now you need to think. Well, actually you don't even need to think, you just have to do that thing I said earlier, where you say where your bank increased, it goes to your cash book receipts. Where your bank decreased, it goes to your cash book payments. So now your bank increases on the debit side. Am I right? So in other words, in the cash book receipts, your bank when your bank increases, it goes to the cash book. I'm confusing myself here. When your bank increases, it increases on the debit side. And if it increases on the debit side, it goes to your cash book receipts. So what you need to do is you need to go to your cash book receipts. Your cash book receipts, the bank account gets debited. So your cash book receipts get debited, and all the other accounts gets credited. Credited. Right. So you just need to know, you think your cash book receipts, what happens to your bank? You receive money, it increases, your bank increases on the debit side, so then you just put a debit under your bank account, and all the other accounts gets credited, except your cost of sales and trading inventory. And there once again you need to just think a little bit further. Remember, cash book receipts. So let's say trading inventory, cost of sales. So let's work out which one gets debited and which one gets credited. So now you have to think of it. Cash book receipt, it means I received money, so I sold goods. Am I right? So in other words, trading inventory, which is an asset, so trading inventory left the business, so it decreases on the credit side. So in other words, your trading inventory gets credited and your cost of sales gets debited. And if you remember when we did this and we did the T accounts, you will remember that your trading inventory did get credited and your cost of sales did get debited. Now the same thing works for your cash book payments. So now you think again, what happens? You can see here cash book payments is when your bank decreases. So obviously cash book payments, your bank is decreasing because you are paying money out. So in other words, it's the credit side, so your bank gets credited, and then every other account gets debited. So that input gets debited, trading inventory gets debited, and your sundry accounts gets debited. And if you remember, and if you actually did the T accounts as we did the exercise, you will see that all your VAT input, remember that input is always a debit. Your trading inventory got debited. You will see that in the transactions. Your petty cash got debited, drawings debited, rent debited. So once again, so your petty cash decreases on the credit side, so that one gets credited and all the other ones gets debited. And now we're looking at your petty cash. Your petty cash becomes less or decreases on the credit side. So petty cash here gets credited and all the rest gets debited. So that's just a very easy way to remember it. To remember on how to do it and which account does get credited and debited. Alright, great stuff. So now that we've done that, now we can calculate and see. Now I am not going to do each and every account, but each and every account here must be transferred to the general ledger. Okay, luckily with these, your bank, your VAT output, your services rendered, your sales, only the totals need to be taken. But in your sundry accounts, you have to take each and every account there and transfer that to the general ledger, including your cost of sales, including your trading inventory. The same goes for petty cash. Each and every account, your petty cash, your postage and stationery, staff refreshments, you will only use the totals. Sundry accounts, your fuel, equipment, all that must be transferred to the general ledger. Now I'm going to do 3 examples. So the first one I'm going to do will be sales. So let's do sales. And that is N2. Remember, I've already explained what the N numbers are. It's your income and expense account, which is your nominal accounts, and then your balance sheet accounts will be your B accounts. Okay. So now, first of all, now when we do sales, now through every book we need to go find the sales accounts in every single book. Now I've got my highlighter, so now we see, okay, in the cash book receipts, there's a sales, so let me highlight sales, and I'm going to highlight that column. So that'll be March, date, whatever, March. Now you have to put in the other leg. Remember when we did, I think one of the first exercise, learning module 1, remember we spoke about the other leg, which is your other leg, which is your other account. Now for all of these accounts, your other leg will always be the main account. And when you do your main account, like the bank account, your other leg will be services rendered plus VAT, or sales plus VAT, and stuff like that. So for this account, sales, the other leg is your main account, which is bank. Okay, this is too thick. Another one, and then the total we put in there, it's 84. Okay, sorry, and the folio, where did we get that from? It's from cash book receipts 1, and then the amount is 84617.72. Okay, so cash book receipts, I'm checking, are there any more sales there? No, it's only that one that we've added up, so we only take the total. Okay, no, nothing there. Then we go to cash book payments, trading inventory, VAT, no sales there. Petty cash, no sales there. So this one is actually very simple. If there's only one total, you just leave it like that. You don't have to add up anything. You just put in sales, it's March, bank, cash book receipts 1, and you put the total and you leave it. So this now is a credit total, and this credit total will now be transferred to your trial balance. To the trial balance, so that will be on the nominal. You've got the balance. Okay, I'll do a little example now of it. Okay, before I confuse everybody. Alright, so that's sales. Now the other example I'm going to do, it's going to be for equipment. Now that's a balance sheet amount, which is an asset, so that'll be number B9. Okay, so now once again, now we have to go through all the books and find equipment. So So let's see, bank, VAT output, services rendered, capital loan. Okay, in cash book receipts, I didn't find any equipment. Then we go cash book payments, bank, VAT input, trading inventory. Here we go, equipment. So let me just highlight that. Okay, so cash book payments. So the date will be, okay, it's March. What's the date for that? It's the 4th. Details, remember the main account will be the other leg, which is bank. The folio, it will be cash book payments 1. And then the amount there will be 7719.25. Okay, are there any other equipments? Vehicles, drowning, petty cash, nothing there. Let's go to the petty cash journal, postage stationery, and yep, here we do have another equipment, so that must go in there now. Okay, so let's just complete this. This will be March 18. The other leg will be your main account, which will be petty cash. Folio is your petty cash journal PCJ 1, and the amount is 51311, and that's it. So now in this case, where you have 2 accounts or 2 items in your journals on equipment, all you do is you just take that and you add it up, and the total for that will be 8232.36. Okay, so then that is that. So now we've got a debit total of 8232. Here we've got a credit total. Okay, then the last little one I'm going to do will be trading inventory. Just remember, you need to do one for everyone. You need to do one for bank, VAT input, trading inventory, each and every account except analysis of receipts. That's not an account. So just from bank, VAT output, services rendered, sales, all of those you will need to transfer to the general ledger. So it's trading inventory. The number for that one is B6. And now we do the same thing over again. I just want to check my time. Where am I now? Sorry about that. Okay, so let's go look at trading inventory. Now first of all, let's go look at cash book receipts. Bank, VAT, service sales. Okay, there's no trading inventory there. Let's go to cash book payments. Here we've got trading inventory. Let's highlight it. And that. Okay, good stuff. So now this one we've already written, so this amount must get debited. Oh, wait. I nearly made a mistake here. Nearly made a mistake here. Cash book receipts, there are no accounts. But remember cost of sales and trading inventory? I nearly forgot that one. You see, and that's why it's important not just to write cost of sales, but make a note of yourself that trading inventory is included there. So let's quickly do the trading inventory. Now the trading inventory gets credited. So let's quickly do that. So that'll be March 31. That's cost of sales. Folio is cash book receipts 1, and the amount is the total, which is 56411.81. Okay, so now we've done that one. And now we're going to look, are there any more trading inventories? Yes, cash book payments. Now this one gets debited, as we wrote it down there. So, okay, yeah, let's do that one quickly. Obviously it will be good if you can do it according to dates, but I'm not going to do that now because I'm running out of time. So let's just say March 31st. The other leg will obviously be bank. That'll be your cash book payments 1. And then the amount for the trading inventory will be 80247 0.90. Okay. Are there any more trading inventory here? No accounts for trading inventory, nothing there. Then we do a petty cash, and we've got a trading inventory there. Starting to run out of time. Okay, trading inventory. So now we're going to do this one quickly. That will be March the 20th. You see, trading inventory goes to the debit side, as we indicated it there. So it's March the 20th. Your other leg will be petty cash, and that will be your petty cash journal 1, and the total is 154.59. Okay, I'm sorry, I'm gonna have to cut it short. As I said previously, I can only record for an hour at a time, so we'll just quickly sum this up when I come back. Thank you.